What is going on, everyone? And welcome back to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is October 10th, 2025, and we are breaking down Intel Corporation, ticker symbol Intel. The company has been on an incredible run lately, fueled by a torrent of positive news that suggests its long-awaited turnaround may finally be taking hold. Let's quickly go over the major headlines before we dive into what the charts are telling us. First, Intel has officially debuted its new Panther Lake PC chips, which are built on its advanced 18A process. The company is touting these as a new era in semiconductor innovation, specifically targeting the high-end AI laptop market to challenge competitors like NVIDIA. This is a make-or-break moment for Intel's comeback bid, and the market has responded with enthusiasm. On the financial front, Intel has also been making smart moves to improve its bottom line. They recently lowered their full-year cost forecast after completing the sale of a majority stake in their Altera business to Silver Lake for a cool $3.3 billion. This move signals a strong focus on financial discipline and operational efficiency, which investors have rewarded handsomely. News from about a month ago also showed the U.S. government taking a nearly 10% equity stake, injecting almost $9 billion and further boosting confidence. So, with that powerful fundamental backdrop, let's see how it all translates into the price action. Looking at the daily chart for Intel, the bigger picture is one of a dramatic trend reversal. After a prolonged downtrend, the stock found a hard bottom back in April 2025, right around the $17.66 level. You can see the stock spent months building a base in the high teens and low 20s, a classic sign of accumulation. The entire character of the stock changed dramatically in mid-September. This massive rally directly coincides with the news of the Altera stake sale and the subsequent cost-cutting announcements around September 15th. The most significant feature on this chart is the massive breakaway gap up on September 18th. The price exploded from a close around the $25 level to open near $31.78, a tremendously bullish signal confirmed by colossal volume. That gap has now established a powerful new support zone for the stock. Since that gap, the stock has continued its strong uptrend and is now trading around $37.80, challenging its 52-week high of $38.68. Key support now rests at the top of that gap, roughly between $30.50 and $31.50. Secondary support has formed in the consolidation area between $33.50 and $34.50. The primary resistance is the 52-week high at $38.68. A break above this level would be extremely significant. Let's zoom in on this recent explosive move to get a better look at its structure. We'll filter the chart to start from the beginning of September. Here you can clearly see the basing action in early September before the Altera news hit. The volume on the initial surge on September 16th and the gap-up day on the 18th was absolutely massive, indicating strong institutional buying. This isn't retail speculation. This is big money rotating into the stock with conviction. Since then, every minor dip has been aggressively bought, forming a clear pattern of higher highs and higher lows. This price action is characteristic of a new, powerful bull trend being established. The consolidation we saw in late September and early October was healthy, allowing the stock to digest its gains before the most recent leg up. Now, let's switch to the 1-hour chart to analyze the short-term structure of this uptrend. Looking at the price action since late September, we can see the trend's health on a micro level. The periods of consolidation are very orderly, often forming bullish flag or pennant patterns before breaking higher. This shows that bulls are in firm control, buying dips and not letting the price pull back too significantly. The recent low from a few days ago, around the $36 mark, has established itself as a key short-term support level. As long as the price remains above this level, the immediate uptrend is intact. Currently, the price is consolidating just below the recent highs. This sideways action is constructive and could be building energy for another push to break the 52-week high. For the day traders out there, let's drill down even further to the 15-minute chart for the last couple of days. On October 8th, We saw a sharp dip in the early afternoon down to about $35.91. Notice how quickly that dip was bought up. The price recovered over $1 within the next hour. This is a clear sign of high demand and trapped sellers, as buyers are eager to step in on any weakness. Following that reversal, the stock rallied to a new high of $38.10 on October 9th. Over the past day, the price has been holding steady in a tight range near these highs, which is very constructive. Intraday traders should watch for a definitive break above yesterday's high of $38.10 as a signal for continuation, or a break below the $37.40 area as a sign of short-term weakness. Alright, let's switch back to the daily chart to recap and put it all together. So, what are the potential scenarios from here? The bullish case is very strong. We have a powerful fundamental narrative shift, backed by a massive trend reversal on the chart with huge volume. The path of least resistance appears to be higher. I would assign a 70% probability to the bullish scenario where Intel breaks through the $38.68 resistance level. If it breaks and holds above that level, the psychological $40 mark is the next logical target, with potential for more upside. This scenario is reinforced by the strong dip buying we've seen and the constructive consolidation near the highs. On the other hand, the bearish case cannot be ignored. The stock is up nearly 100% from its lows just a few months ago and could be considered overbought in the short term. A failure at the $38.68 resistance could form a double top, leading to a pullback. I'd put the probability of this bearish scenario around 30%. This would be reinforced if we see a sharp rejection at the highs on heavy selling volume, followed by a break below the short-term support at $36. If that happens, the next support to watch would be in the $33.50 to $34.50 range. So, to summarize the key levels to watch, resistance is at the 52-week high of $38.68. Short-term support is around $36, with major support zones at $33.50, and then down at the top of the gap around $30.50. Moving forward, keep a close eye on the company's next earnings report to validate their financial progress and any news related to the market adoption of their Panther Lake chips. Those will be the key catalysts that determine whether this incredible rally has legs. Thank you for tuning in to Explain the Charts. Please remember, this analysis is for informational purposes only and is not financial advice. Investing involves risk, and you should always conduct your own research and due diligence before making any investment decisions. Trade smart, and we'll see you in the next one.